It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone, from balmy Boston, Massachusetts, actually Newton, Massachusetts. A good morning to you, and thank you, Steve, for a great 2 hours lead-in to this show. Steve is here Monday through Friday, 9 o'clock till 10. Then there is the Money Masters with Tom O'Brien, Tom being on vacation, and a well-deserved vacation. You've got Steve Rhodes sitting in by himself for that second hour. Then I come along 11 o'clock till noon with the Tiger Technicians Hour. 877-927-6648 is the number to call for any of your market-related questions. Then you get Larry Pesavento, who I believe is out the country. I'm not sure if he's in Philadelphia. He's already gone overseas, but he will be on 11 o'clock till 12. Later on in the day, at 3 o'clock, you get Dave White, and then you get, we'll have a mix of people coming in. I think Steve does 4 to 5, someone does 5 to 6, I believe, maybe Ken Shreve. You know, we've got a fantastic lineup here at TFNN. What a team. In fact, as I recall, I just thought of it right now. I think Kate Stelter was talking about Zoll Technologies. I'm almost sure it was Kate, Z-O-L. A favorite of mine, although we hardly ever have it in my portfolio, although I always seem to watch it as it's moving up. And I say, oh, it's a medical equipment company, cardiac resuscitation products, etc. Takeover offer, and it's up $17 at 23.65%. So good call. If Kate was, if that's, I think I'm almost sure that Kate was the one talking about it as something that was on her radar, and she gave an analysis, and it's on my radar. Now it's too late. It's gone. So let's go through the numbers, and this is going to be a fascinating period, and I'll tell you why. If you look at the ESM12, this is the E-mini. In many of the chart patterns that I've been talking about for a while, and my subscribers to my opening call have been following really closely, there's been a rising wedge formation. What is that? That's like a triangle, a rising triangle, thinning out until it comes to an apex. You don't actually know where the apex is going to be. You just know that it narrows and narrows, and then all of a sudden it either breaks up, and this is one of the few times in my years and years of market analysis where over the past, I'd say maybe 3 to 4 weeks, I've seen rising wedge formations actually take out the upside. Normally what you do is you break to the downside. Now there's a rule that I often hear, and I always shake my head and say, I don't know where these people are. And they say, oh, rising wedge, when you break down, you go all the way to the bottom again. And I don't see that. I have seen it, but rarely does it happen. What normally happens is that before you get a reversal of fortune, in other words, that rising trend breaks, you get a cup formation. That's what I've been talking about for a while. And that cup formation is really important. Why? Because when you look at the cup formation as returning toward, what I said Friday is it goes either toward, to, or above the previous left side high bar. In this case, that would be 1371.25 on the June contract. That's when you get to see whether or not you've got a technical failure whereby the MACD, for me, my two technical indicators, major indicators, the MACD, the moving average convergence divergence, and the slow stochastic are going to actually show you that there's a negative or a positive divergence. This is a negative divergence. Be careful, because what you could do is you could retrace back down toward the lower part of the cup, in this case 1332.75. My suspicion, and I have to say it's a suspicion, and as a result, based on all the work that I've done, we took appropriate action in my opening call this morning. And I have to say it's more as protection. Why? Because if the market moves up, two of our longs will, like Friday, should more than make up for any potential insurance that we've taken, because they've been participating beautifully in this part of the rally. They had, since late November, December, they've been doing very well. But then many of the other stocks have actually been consolidating for a little while. You've got a handful that have been going, in a handful of sectors, that is, that have been going higher. But you also have, and I did an incredible amount of work this weekend on the new highs and a whole bunch of other things. So let me explain what I'm looking at. The pattern that we've got now with the rising wedge. Now, many of you do not get the futures, so let me go to something. I've explained the futures. Now let me go to the Dow, and then I'll give you the numbers as we go through it, because I'll go through Monday. Hey, let's go through the sectors. 877-927-6648 is the number to call. Let me take this first period to go through the different analyses, I should say. In the Dow, what we have, I need to get rid of this. It's a little bit, all right, that's my analysis, but that's fine. Now, there's a technique in my CD introducing the ChapmanWave methodology, and many of you have been getting it over the last week or two and the next week or so, especially some of you from overseas. You'll be getting it pretty soon. There's a technique that I call the smooth peak G. Basically what that says is that when you get to the sixth highest peak, in this case peak F, and I'm going to talk about a number of things at the same time. If you look at the high of 13,027 on the 27th of February, there are so many characteristics within this technical formation that need to be talked about, that I'll do it because it's part of the analysis process. And we've got time. Let me tell you, I don't think the market is going to make a new I don't think in this particular moment it's going to make a new recovery high. I think we're in a little bit of a consolidation, at least for a couple of days, a few days. And by maybe Thursday going into options expiration Friday, maybe we'll have another spike to the upside. I don't know. But this is the way I'm treating it. So we've got plenty of time. No rush about to do anything. Let me look at this. The candle that was formed on the 27th, I call... it's a long-legged doji candle. In other words, you open and close at about the same price. In this case, it was almost the exact same price. You opened at 12,981, and you closed at 12,981.13, and you closed at 12,981.51. I would say 20 cents is pretty darn close to break even. Just an even unch close. That's what I call a 0% close. Very important to my work. Now, look at this. For me, the analysis of a long candle like that says, no matter how high you go, you're bound to go back down and take out the low of the bar. My analysis, and this is not Nissen's candle. I don't believe I've read that at all ever in Nissen's work on candles, although I haven't kept up maybe for the past 6 months or so, but that's what I recall. This is something that through trial and error, I've figured out. Mostly error, and then you finally get to come to a conclusion. So, in this case, what it says is that if you go underneath the wick of this long-legged doji, you will still come back and try to test somewhere near the candle. Well, we went above it in the smooth peak G. And what does the smooth peak G mean in the ChapmanWave? It means that you make a leg F, then you make a peak F. But you either don't take out the low of the bar that was F, you make a higher low bar, or you take it out, but really quickly you go back up. And what happens is then you go within, it's got to be within 2 to 3. Three, sometimes it's 4, but I like to go 3. Within 3 bars, it makes a new recovery high. And from that bar, which closes down at the lows of the day, you start down with a very ugly candle very soon afterwards. Hey, this filled every single prerequisite that's in the ChapmanWave methodology. It went to the smooth peak G. And what does that mean? It means that the little trough that's formed, the little peak itself, I'm sorry, not the trough, the little peak that's formed from peak F is so negligible that it really continues like an extension of peak F, and then you get a pullback. Now, here's the irony. The push to the upside also takes out a tremendous amount of the weakness and the strength, so that a smooth peak G very often doesn't have the same debilitating downside effect as just a plain old peak G. And that's exactly what happened. The stochastic and MACD, the MACD was terrible, deflected lower. The stochastic was acting badly. And then what happens is that you come down over the next few days and the Dow breaks that low of 12,929. And then it has that, you remember that ugly Tuesday, was it Monday of last week? Monday, Tuesday, Wednesday, Thursday. Yeah, Monday of last week, down to 12,734. And what happens? You get that pattern that I call the rising wedge cup formation. And now we've got the bounce back. In this case, the Dow did not, unlike the E-minis, which has overnight trading, the Dow didn't go even close to the 13,055. On Friday, the best it did was 12,988. So this is now where the market is, the Dow is most vulnerable. If I go to the weekly chart, the weekly chart says you've made a nominal new high, 13,055, above the week of May 6 high of 12,876 of last year. Plunged down to 10,404. That's a 2,000. That's a lot. 2,400 point decline. We've just made 2,400 back up. And we've got a left side, right side price time match. Now, remember, a lot of people say the downside works way quicker than the upside. No. In a mini crash formation. Now, if you go to the 120-minute chart, you'll see that that was essentially a little mini crash, that slump on Monday. But it's not a crash at all in the general overall market. The weekly didn't even blink. It just kind of said, huh? What? It's like a little bird on top of an elephant. I mean, just nothing, right? So now listen to this. So now we've made a trough C in the 120-minute chart. We've gone to a peak C. There's a chance that we might make a new high above 12,968.72, and then we've got to be very careful. Now, the reason why I talk about this as a very critical moment in the rising wedge formation with the cup is that if it starts to fail from here, then there's a really good chance we're going to retest the 12,734 level. Now, before we go to our first break, let me just run through. So, here are the parameters. Dow, tremendous resistance of the 12,990s to 13,010 area. If it breaks above 10 to 13,010, I'm wrong. We're going to probably retest the 13,055 level now rather than later in the week. When I mean now, I mean today or tomorrow, rather than pulling back or just digesting for a few days. Now, the S&P, SPX.X, and the weekly chart is still very strong and the monthly is strong. I can't talk about that right at this moment, but I can say that in the S&P, we've done a little bit better. Actually, the chart pattern, remember the chart pattern in the S&P, the rising wedge and everything, the cash that is, was not as good as the Dow before. Now it's actually a little bit better because 1378.04 was the high of the 29th of February. It slipped down to 1340.23. Now it's ready back on Friday. Went to 1374. I guess they're pretty much the same. But I like the chart pattern a little bit better in the S&P. It's actually quite a bit stronger. Technically, the MACD and stochastic actually look quite a bit better. So I'll give you the parameters all when we get back. 877-927-6648. We made a fantastic number of new highs. I want to talk about that as well. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, 877-927-6648. And let's just go through the numbers here. Dow's up 13. S&P Dow's up 13 at 12,935. S&P is down 298 at 1367. Comp Index is at 29.74, down 13. Gold is, so the GLD is down $1.20 at 165.18. Gold is down about 12 at 16.99. Silver is down about 46 cents at 33.74. High-grade copper is at 3.859, trying desperately to get back to the 4s. That to me is very important, will be very important. Dollar is down 7 cents at 79.97. And we've got bonds. Where are bonds? Bonds are at up 17.30 seconds at 140 and 27.30 seconds. So let's continue this. I'm actually just doing some work here on the new high list Tesco Technologies. 23.55, down 4 cents. Oh, this is amazing. Leg D in the weekly, leg C in the monthly. So this is still going even higher. But we want to go on with the analysis. So let's go. The SPX, these are the parameters I'm looking at. Make it real simple. SPX closes above Friday's high, that's closes. Now, this is different. I usually say, if it just gets there, that's fine. No, it needs to close above 1374.78. The moment it does that, that high of 1378.04 on the 29th of Feb, that becomes a focal point. Right now, the MACD's negative stochastic is right down at 57%. It's going to take more than one spike to the upside to change the fast-moving average. This yellow line, for those of you who are looking at Tiger TV. Hey, don't forget, TV 11, I'm archived. Anytime you want to go through these things, maybe I'm talking a little bit too quickly with a foreign accent. Actually, no, you have the foreign accent. I don't have. Yeah, of course. I have the foreign accent. I'm trying my best to slow it down. It's hard because I get all excited when I see all these charts. I love charts. So that's the story now. The weekly chart, as I said, is still really holding like a magnet to the 1370 level back from last May. It's a 1368.11, made a high of 1378.04. And the weekly chart has gone, 1378, has gone to a new recovery high. Now, what? 1370, yes. Now what happens is, this is so fascinating. I get so many emails. Actually, I had a great one from someone in Singapore this morning asking me about the Singapore index. I don't have the Singapore index. I do have the ETF. I'm going to explain something as I go along. But let's stay with the S&P for the moment. Now, this is new leg A up in the monthly chart, gray A. Now I get rid of that immediately because we've made a new high. Because we are so much above the 66.79 low, the 57% decline from 2007 high of 1576 down to the low of 66.79 in March of 2009, this has to be considered a new A as a possibility, but I go conservatively to call it E. So this is new leg E up above the D, and E can go to an F, and it can recycle. That's not the issue. The issue is I become very cautious in terms of the notation, not in terms of the chart pattern or anything. V-shaped patterns can be really powerful if they break decisively above the left side high. If they stall, they have the same impact as a cup formation, and you can pull back. So 12.99 would be major support in the monthly chart. But in the meantime, on a short-term basis, having made a new recovery high in, what's this month? In the month of... Oh, no, we haven't. 1378.04 was the high in February. We need to break above that to make a new high in March, extension of that leg. Otherwise, it becomes a peak E. And then I have to be somewhat careful. And I won't do it today. Maybe I'll do it Wednesday. I'm not sure if I have time to do it today, to pull up my naked monthly chart, long-term chart with the channels. But so far, the channel's still absolutely intact for the upside of the S&P. So now we're going to go to, so the support on a short-term basis, 1363. Break that, close at about 1358 anytime this week, and we'll be probably retesting the 13. I don't have to go all the way to 1340, but absolutely the 1352 to 1347 area would be next if we close there. So this is kind of an important moment. So let's go to the Qs. In the Qs, yeah, I got the S&P. I had it written on the left side of my notebook. I did find it. Thank you. You know, the Den is a fantastic medium. We have TJ mentioned the stock I was looking for. My question was, let me do this just for fun. There's an IPO. Now, most people can't do IPOs because they need the days and they need a long look back and everything. I don't. I get an IPO showing up. I can go from the moment it starts. I can put it on to a 10-minute or 120-minute chart. I can start my analysis. We're in leg B up in the 120-minute chart of Sun Peaks Ventures, Inc. We're in leg D, peak D, and we're now doing an inside. This is a rectangle formation. The analysis works. I'll be back straight after this. Basil Chapman, 877-927-6648. A little bit all over the show this morning. Why? It's the first of the week.
Hi, folks. Turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
Hi, folks. This is Tom O'Brien.
If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Yep, I can tell it's a quiet day. So you know what we'll do? I'll show you the ChapmanWave in real time. We're looking at SNPK. Sun Peaks Ventures Inc. came out as an IPO on the 8th. That's on Thursday. I wouldn't recommend this because it's trading. It's like a pink sheet thing, 0.6812. But it doesn't matter. The ChapmanWave works at any time frame or any. It doesn't matter. I'm just doing the analysis. Okay. It says that we've made. In fact, I'm going to call this because it's a pink sheet and it's a. It's trading way below 1 at 0.6812. I'm going to use the phantom peak. It's making legs C in the 120-minute chart. Not bad action so far. It's up 0.0862. Now listen to this. So because of that, I said that you've got to look. You can have a rectangle formation. I typed it in fact, somewhere. I can't remember where. You can have a rectangle formation in making an inside buy mode in the ChapmanWave. Now, this is what I mean. Let me just go to this chart right behind here, and I'll explain everything I'm doing. This is the 120-minute chart. And the 120-minute chart shows, sorry, this is the 10-minute chart, that from the low of Thursday at 0.2850, it went to peak A, peak B, and then it pulled back, and it had an inside A, B, C, and then it made a peak D. Then it pulls back at 0.62. It pulls back, starts another buy mode, and jumps. In fact, I'm not sure if it could even be called the buy mode yet, but the stochastic MACD did go over 80%, and the MACD is good. So I called it an E, and within it I said there could be another buy mode formulating, and that's the way you always look. That's how you want to use time frames. You want to be able to go from a larger time frame to a smaller and a smaller, or a smaller to a larger, depending on what you're looking at. Which way, if you want to buy it, then you want to go from the smallest time frame. If you're looking for a sell signal, you look at the larger time frame, then you keep coming down and say, is this a peak D, say, in the 120? Is that coinciding with the 10-minute peak D? Is that a 3-minute, etc.? So what we did is we went into this rectangle formation in a peak E in the 3-minute chart, pull back and look at that rectangle. My theory with rectangles is they can last a lot longer than your patience. And be careful, because every time it looks like it's going to break down, you want to short it, and instead it goes right back. Every time it's going to break out, you want to buy it, and it comes right back in until sometime, as it did today when it broke out at the open, it popped at 9:33. It popped to 0.700 high. Now within it, we've got another little peak A, B. Here's a C, and there's a chance you can even make a D, and then you've got to be a bit careful here. So this is the analysis. It doesn't matter what time frame. So let's use that same methodology to go to an 877-927-6648. That's the number to call. It's not just 4 digits, it's many more. Call that number. I want to hear from you. Now in the Qs, this is really important. The Qs went to a nominal new high. They went 65.08, and that was at the 29th, on the 2nd of March. At 65.08, they pulled back to a doji low at 63.23 on the 6th. They run up on Friday to a slightly higher high. Don't close above the previous high. They do close above the previous high bar closing price of the 2nd, but that wasn't good enough. I want, at this point, a close above 65.08. Now look what's happened. We've pulled back. We made a slightly lower high today, 65.14, 65.11. The day is not even, it's 2 hours into the session, so hardly begun. And now look what's happened. The stochastic is rallying, but it's still only at 74%, and the MACD is still negative. So if there is a breakout to the upside, that can continue until the MACD goes positive. That's really positive. My suspicion is we're bumping to tremendous resistance. The weekly chart, oops, there's a lot of writing. I'm sorry about that. There you are. Is a cup, a ChapmanWave cup and ladle. And that's gone to a leg D and possibly a peak D. If there's no new high this week, that says 62.91 will be the major support if the Qs were to come down. Monthly chart I can't talk about. It's just been fantastic in an up channel. It's doing great. The IWM, I'll do that real quickly, and then we're going to go to our first caller. IWM is pulling back at 81.16, made a strong leg A. If the IWM is able to hold the low of 80.46 through the day, and tomorrow doesn't break it, but instead has a rally, it could start leg B up above 82.15. I'm watching this real closely. Why? Because it was the weakest. It's still a little bit the weakest of the major indices, but the weekly chart has the potential to produce a very interesting chart pattern, and that chart pattern will be quite explosive to the upside if the IWM at any point in the next week or two, without breaking, without breaking 81 support, so that's going to be hard. Let me say, not right now, that can't be 81. I'm sorry, without breaking 78. Phew, I thought that was crazy. 78 support. If it can break above that 82.15 and hold there, there's a chance it could make what I call a ChapmanWave falling axe, a breakout pattern. Let's go to Joe in Boston. Hi, Joe. How are you?
Good, Basil. How are you?
Can you believe it? We got all those people from Florida starting to move back up here. Those snowbirds are saying, hey, we don't need the humidity in it. Let's go to Boston. The weather is so fantastic. We'll pay for this, right?
Yeah, we'll pay for it. Hey, I wanted you to look at EMC. What I was impressed with is it powered right through that whole top that it had from February to July of last year. It just powered right through that. Can you just kind of expound on that and talk about the power of that move?
I'll expound on it as the tears well in my eyes, because this has been a favorite of mine for years.
Yeah.
And I've only had it periodically. We have had VMware quite often. We haven't even got VMware this time, but EMC is retesting the high of the week of the 22nd of April of 2011. 28.73 was the high. That was a rare peak G. almost like a smooth peak G, and then it happened in 3 bars. Now look what's happened. It made a dreaded H pattern, went almost to the 200-period moving average at 19.84 the week of the 19th of August 2011, made a little arch formation, held the low, and then went to peak B. Peak B was the week of the 28th of October, higher peak, peak C, on the 3rd of February of this year at 26.49. And it made, well, I'm not going to call it a peak D because the week has only just begun, but it's leg D at 29.07 on the 9th of March. Friday. And that was last week. And that says to me that EMC with the stochastic holding at 96% and the MACD still very strong, this is a fabulous stock. Leg D says you got to be a little bit careful, but here's what's really important. There are so many stocks. In fact, that's why I did all this work on new highs, on about 50 new highs or something. Man, must be even more over the weekend. Because there are so many stocks. For instance, let me explain what happened. There's what I call an instant restart. It's a very special ChapmanWave technique. It's only unique to this particular technique at $20 on the week of, this is in April of 2010. It holds the 9-period exponential moving average. Within 3 bars, it breaks to a new recovery high at 20.65, goes to a peak E. I call it a peak E at 21.83 in September of 2010. Then for an entire year, it goes to the April high of 28.73 peak F, a perfect peak F in my work, and it breaks the 9-period moving average in support in August of 2011. The MACD turns down, stochastic turns down, it plummets down to 20, back to that 20, it goes to 19.84 in August of 2011, and now it's making new recovery highs. Is that correct? So 28.73 and 29.07. Now there's a big dilemma I have. Is this brand new leg B, which is really bullish, not only for EMC, but for the whole high-tech area? Because let's face it, where EMC is going, you're going to get a lot of stocks that follow, right?
Right. Mm-hmm.
So I have to say to myself, okay, put everything aside. Forget about the bearishness. Forget about the bullishness. What the heck is this saying? What it is saying is that this month of March is going to be really important, because if it fails and it starts to break below 25.55, say it makes a lower high in April and breaks under 25.55, and the technicals look like they would then turn down, I have to call it a rare G. So those are my parameters, because if it breaks and closes anywhere in the 30 area, 30.50 at the end of the month, that would be such an unusual G. I have to call it leg B. And that means I could not get a sell signal until peak B, which would have to be in, let's call it April. Okay, let's just say April does pull back a little bit. And then there's a new high in May. That's C. And then there's a pullback in June. And the following, and months usually don't go back and forth like that. But let's say July makes D. I couldn't get a confirmation of a peak until August of a peak D. So do you understand that this, to me, the analysis that I'm trying to do, when you've just got the home builders and the construction area, the ITB, all breaking out, looking really strong and becoming the new sexy area, I'm saying to myself, I do not want to get very bearish, because it's the weight of evidence with so many stocks. If this is a recession, how can Chipotle how can Nike be at all-time highs?
Right.
How can Ross Stores be at all-time highs? Yum. How can Yum? Something is wrong with that picture. And all I can say, and if you look at the XLF, I'm answering your question, although you asked me about EMC. I have no choice but to try to put it into the package. And the package says that the XLF has held really well. It could be a little digestive phase now because the MACD and stochastic are not that great.
Yeah.
It has gone to slightly new recovery high. It went to 14.97, actually 14.97 is the double top. So it's holding very well. I can only tell you this. You're in it or not, EMC?
No, I'm not. I was just impressed the fact that it just powered through that 5-month range. It just powered right through it.
Yeah, and it did it so quietly because most people would be looking at VMware, which is the sexy stock.
Right.
This is the subsidiary of EMC, and EMC has made a peak D and it's just pulling back right now. Peak C in the weekly, monthly still is in a big consolidation. It's potentially forming that oval pattern. I don't know if you remember oval patterns. In my work, can produce that stalk leg. And that can say that, yep, it's going to, VMware is going to go to the 120s. So I'm going to be very cautious. Although my opening call subscribers, we went a little bit cautious today, protection. I have to tell you that I am really impressed with the action of stocks. EMC came up when I was looking over the weekend. I'm shaking my head as always saying, man, you keep promising to get into the stock. You had it once at, I wonder if it's on this particular chart here. I'm going to just scroll back if everybody forgives me. Here we go. No, I can't find it.
Can you look at one more for me? It's another one, but this thing's been beaten down. But tell me if you think this is trying to form a bottom. Pull up CRR.
CRR. Now,
pull that up on a weekly. It went right to
Carbook Ceramics, yes.
Yeah. How does that look to you on that?
Now, that's a completely different chart.
Yeah,
that is a chart that made a completely different chart because it made a peak E high at 163. It went from 2633 back in 2009 to 163 in July of 2011. Came pulling back all the way to 90.41, and then the most recent lows are 85.68, 85, 86.34. Now, I happen to like when monthly charts make as just almost an imperceptible higher high off bottoms, or an imperceptible higher high top 1 month, 2 consecutive months where it's so hard to see because that sometimes gives you. In fact, I've got a whole notebook here that I've been building with all my different chart patterns, and this one here I wasn't sure what to call it. In fact, I can't remember what I called it in the end. But it's like a 2 consecutive bars of double top with only a slightly lower high, and very often that sets in pace a pullback. So I'm going to be watching this. I had it, I forgot all about it until recently. Now, I don't know if you use the 200 period moving average, but if you look at that, it's held.
On the weekly, it hit it.
On the weekly, yes, and it's using it as a base of support. So now, if you don't have a position, you have to use the daily. And the daily chart of CRR, which is up at 195 and 99.95, that's a lot of nines there. So this is A, B, peak C at 101.71 on the 8th, pulls back, and today it's gone to 102, round number 102 high. So this is leg D. Let me just type that in for those of you looking at TFNN, Tiger TV, A, B, C, and a very quick D. Says be a little careful here when you make a very quick C to D, or especially D to E. You got to be a little quick, a little cautious, because let's see the 120-minute chart. A, B, C, D. Yeah, this could be leg E. So I would say it could pull back. Now let me explain something. As a speculation. And at first you have to call it a speculation because the daily chart has the gap. Oh, I've done a lot of work on gaps lately. There's a gap down on the 26th of January in CRR, Carbo Ceramics, at 117.21. The previous day it closed at 128.98. So that gap would be the target to the upside. So you know what I'm going to do? If you don't mind holding on, I'm going to do a little bit of work here, and I'm going to give you an analysis to say the 2 trades that I would do on EMC and CRR straight after the break, okay? All right. Okay, folks, Dow's up 19, S&P's up down 268. Little divergence there. First, a little holding pattern we've got here. I'll be right back. Basil Chapman, 877-927-60.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. Basil Chapman here. I'm going to just show you something that's been quite fascinating for me. I'm doing just the last 120-minute buy mode in EMC, and we're on right now with Joe in Boston. We're talking about EMC Corporation. This is they are, what do you call those things? Not backups. They have
data storage.
Data storage. So data storage, and it's actually a Massachusetts company. And the weekly chart, now this is the same thing that's happened now with many daily charts. I get myself a very nice, some kind of a signal at a potential G with the technicals dropping just the way it's supposed to. And then I have to go back and I have to renotate, and it comes out to A, B, C. I did that C, alternate wave count, and it's D. So as it stands right now, it's acting really well. You know, a bear market goes really quickly. Every opportunity, and the market makes lower lows and lower highs intraday. Every bit of news, whether it's the best news or the worst news, the market takes it as an opportunity to sell. In a bull market, every opportunity to buy is there. And look, today should have been a down move, and it's not. It could be by the end of the day. But even here, there's a mixed market. And this mixed market is so important to identify. So this is what I'm looking at. normally I would say to you, you could just nibble at a little bit of EMC right here with maybe 3 entry points. One right here. If it breaks out above 2907, there's not much you're going to be able to do. I wouldn't actually add to it at that point. Why? Because the weekly chart says it's very strong, but I have to wait a whole week to see whether it's going to close below the Roman candle of last week, although it's a positive Roman candle, but below the open of 2830. So I don't know yet. So here's what I'm going to say to you. I love it. If you're looking at longer term, then I would absolutely say
longer term meaning, I mean, like this.
I'm talking about into the summer.
Yeah. Could this go into the mid-30s?
I believe that there's every sign that says that it should go to about 32.5 to 35.20, somewhere around there, and I won't know an actual upside projection until it closes decisively over the high of April of last year of 28.73. As soon as it does, if it can close in the 29s and it can do for 2 consecutive weeks, then absolutely I see no problem with it going high. But on a shorter-term basis, the leg that it had up here from the low of 27.07, that says to me all of that would be an opportunity to start looking at some kind of a position. So this is the way I'm going to say to you. I'm prepared to give up today and say that there are many signs that say we should be consolidating for about a day or 2 or 3, maybe to Wednesday afternoon. If we break out significantly to the upside, if the Dow gets to 12,990s today, I have to tell you something. I don't know what bears are going to do, the heavy bears that have been just adding and adding to position, because money managers are going to say 13,000. So now everybody's going to be calling me to say, oh my God, we're in the 13,000s and I've missed this entire 6,000 point move. You know what I mean? And the hedge funds are going to cover. So I'm going to say to you is, I personally would wait a little bit, but if I'm looking out, I would start a position right here at 28.87, saying that position can have a 2-point risk. That's less than a 10% risk. I would then put in another bid at 28, even though you've got this one on. I would still say I want another position round about, I would say 28.10 to 27.50. And then I would have another position on at about 26.50. And I would hope I only got 2 positions. Right. I really don't want that 3rd position. I'd get real nervous. I only want 2 positions. That's that one. And the other one that you said was what?
CRR.
Yeah, CRR. Oh, that's a great one. I've got a chart pattern here in the 120-minute chart. I think it's worth talking about. Okay. If you don't, it's the end of the show. Barry Pesavento is coming on. I would start CRR at 98. I'd start a position at 98. That's the way I would do it. Thanks for being here. Thanks for calling. Wow, that was a quick hour.